Hello and welcome back to the TF Team podcast, Between Dollars and Dreams. This is news you can use. We'd like to thank all of our viewers out there who joined us on April 7th for our webinar. It was a great success. We had Laura and Kevin joining Pierre to talk about first home mortgages and buying in Ontario. So we hope you did enjoy that, and we welcome you back to news you can use today. So Pierre, once again, it's always a busy week here.
Oh, goodness.
So we have some more news. This week we tried to find some happier stories, shall we say. So some good news. It seems like Ontario is cutting small business taxes by $1.1 billion. So the idea is they're going to cut this corporate income tax from 3.2% down to 2.2% over the next 3 years, which is a 31.25% reduction in existing rates. So what does this mean for small businesses here?
More money in their pocket, right?
Okay.
So which is a good thing. I mean, the one thing you kind of have to remember, you only pay taxes when you make money.
Right.
A good chunk of businesses, they don't make any money.
Okay.
So that gives them hope, so that once we start making money and starting, seeing the fruit of our labor, then we get to maintain and retain most of that. And what could they do with it? Well, maybe hire more individuals, invest more in their business in terms of R&D, new equipment, things of that nature. And guess what? What does it do to the economy? Spurs more income into the economy, more dollars and cents. Yeah, between dollars and dreams, dollars and cents. And what does that do? That grows the economy, and we like economic growth. So good news on the forefront. Just hoping that they could do a bit more on other means.
Okay. So again, for small businesses, you do have to obviously be making a profit for this to have more of an impact. But even if you're not making a huge profit, this is still technically less tax we're paying, so more money that we can reinvest in that company to grow that company further. And again, as you're saying, hopefully hire some new people or maybe give a raise to the employees that they already have.
Yeah.
Then that money will then trickle back into the economy as people spend.
Exactly, because if I give you a raise, and don't be thinking of getting a raise, but if I give you a raise, what are you going to do with most of the money? You're probably going to spend it.
Gotcha.
Which is probably not necessarily a bad thing, because it kind of recycles into the economy. And again, the economy grows, and if the economy grows, then the companies are profitable. Companies are profitable, making more money. That means they have more money to hire more individuals, which means, again, more individuals making more money. It's kind of have a snowball effect. And then guess what? Corporate profits will also increase the stock market. So all good news all the way around. So we're just hoping to have more of those good news.
Absolutely.
In the days to come.
Absolutely. We hope to be able to share those with you. So on to some more good news for lower income earners. The Ontario government has also announced that they're going to be raising the minimum wage. They're going to be raising it from $17.60 to $17.95 as of October the 1st. Of this year. So that should benefit about 700,000 or more people in Ontario. And it is tied into the Consumer Price Index, Ontario's Consumer Price Index at 1.9%.
Yeah.
So that means that this is a raise, but it's tied into inflation.
So you're just, you're going up at the same rate as inflation. So you're maintaining your purchasing power, not necessarily gaining. So, but again, let's take the good news.
Absolutely.
It's better than going the other way around. So
absolutely,
that is good news. But having said that, depending on who you talk to, I mean, you and I have that conversation about universal income. Right. So some, proponents of universal income are saying that, it should be around the $30 mark. That's what it should be, between, let's say, $25 to $30. I'm not going to argue with the numbers, but what the impact is some unintended consequences. If you're going to increase wages by such a big amount, then the impact is that businesses, they have, a couple of choices to make. Do we increase prices to match that increase, or do we cut our expenses elsewhere? And what's the biggest expense?
Employees.
There you go, wages and benefits. So I think we should get there gradually and get to an income that everybody, every Ontarian, every Canadian could have the standard of living that they that they deserve, right? So we're hoping to get there, but again, not at the detriment of businesses.
Of course, yeah. I mean, we have that small business break that we just talked about. We don't want to take all that away for increased wages. Increased wages, rather.
Exactly.
But that's an excellent point. I know we were talking about a universal income. We may touch on this in the future in the sense of AI.
Goodness. Scary stuff.
Scary. It can be. It can be. If you've ever watched the movie Terminator
Yes.
as a kid, you might be terrified.
Yes.
But hopefully James Cameron was wrong.
Exactly. What is it? Skynet was supposed to take over.
In 1997.
That's right. So we're still here.
I think we're okay.
I think it's us, right? We're not AI generated?
I hope not.
I don't. Okay.
I hope
all
not.
right.
If it is, it's a great facsimile. But it's interesting that we talk about this universal wage. I know that we have, the Ontario government has previously talked about this, and we'll see what happens. But this is good news for low-income earners to keep up with that inflation. Again, you're not necessarily maybe getting a raise, but you're at least keeping up with everything else.
Exactly.
Okay, well, that's, again, some good news for everyone out there. So
Yeah, exactly.
so let's talk about, unfortunately, maybe some not so good news and how the war in the Middle East is already impacting the mortgage rates in Canada. So it seems that over a 3-week period last month, mortgage rates increased 0.5%. So they are now up to, I think it was 0.49.
Yeah, I think 4.9 for a 5-year and about 4.5% for a 3-year rate. Now, you know, we knew it was coming. I think you and I have talked about that. I mean, just look outside. Gas prices are going up. The cost of diesel, has gone up tremendously. It's well over $2 to $2.20. So what is diesel? Who uses diesel besides a Golf GTI?
Yeah.
It's the big trucks, and all of our food comes,
and
on
most
a cargo ship
or trains even.
Exactly. So all the costs will be creeping up shortly. So if they're anticipating that by May the prices at the grocery shop at the grocery store is going to go up tremendously, and then now we're also starting seeing the impact of that is not only prices are going to go up, but interest rates are also going to go up. And then inflation will also go up. So it's a triple threat. So, what could we do? We just had the webinar about, buying your first home. If you were thinking, about buying your first home, now's the time. Lock in those rates with your mortgage broker, with your bank, so that if rates continue to go up, at least you're locked in at this low rate. And if the war ends and peace comes to the Middle East, and then interest rates will go down, and then you'll be able to take advantage of the lower rates. So it's kind of a win-win, but you need to act sooner rather than later, because the only trajectory that I see right now is up.
Okay, so again, we thank you for joining that webinar last week. We do think that it's probably a good time to lock in that mortgage. So if you don't have that plan, you should get on that now and speak to a financial professional. So this is the news for the week. Thank you for joining us for News You Can Use Between Dollars and Dreams. We do hope that you enjoyed some of the good news that we had this week. And again, if you don't have that financial plan, now is a perfect time to talk to somebody and get that plan in action to try and take advantage of the situation. So we do encourage you to reach out. And of course, we always encourage you to follow and like us. And thank you again for joining us. Take care and have a great week.
Bye for now.